What's up, everybody? It's Stocks for Rail, and today we're going to get into the options trade plays. It's been a minute since I made a video like this. However, it's okay because your boy's still been posting plays everywhere, and hopefully everybody's been eating. I know a lot has, but we have something for the Minnows, the Dolphins, the Orcas, as we always do. Minnows, a play under $50 on the contract. Dolphin plays under $150 per contract. And the whales, the orcas, the sharks is $200 plus for contract pricing. Okay, so that's how we have it broken down. Get into it right now. All right, so the first play, the only play right now that we're looking at is going to be SoFi, okay? Now, this was really hard for me because I wanted to post a play that was in line with earnings and the earnings play that I plan on playing. However, those contracts right now, I'm not really a fan of. So I have some forward thinking here. It's okay. We're going to figure it all out, and it is what it is. In the meantime, these are short-term positions to get in, get up, get out on SoFi if you so choose. Okay, so what do we have here? In that chart that you see, you notice that we have a red bar and we have a light blue or tealish bar. Those are our supply and demand zones. Okay, in the middle we have 1545, which is a halfway point. Below that line we're bearish, above that line we're bullish. Okay, but essentially when we're above that line and then we're being rejected at supply, then that means that it's time for shorts, likely, right? So as it sits, the supply zone looks like we were rejected and now we're falling below 1597. I checked the after hours and right now we're at 1583 at the time of this recording. Okay, so I'm going to talk about the puts first, which is at the bottom. It's the bottom line with all the numbers. Okay, so for the puts, weakness below 1597, we're looking to enter. Okay, our stop is 1649. Okay, why is our stop 1649? Because likely we're able to come back up. Actually, I'm sorry, not 1649, 1595. 1599. I'm sorry. So if we break above, god dang it, 1616, scratch that, start over, right? So for the puts, if we break below 1597, then we're looking for shorts. Our stop loss is going to be at 1616. Okay, that is us retesting supply. Now, of course, what I'm saying here is that's not a hard stop for you. That's not what I'm saying to do. Again, this is not financial advice or a suggestion for you to buy, hold, or sell. But what I'm saying is that if we're approaching 1616 and we're looking like we're gonna have strength into that level, through that level, then I'm cutting my position. If we start to see weakness or bearish candlesticks, then guess what? I might add to my position. But that's what that is, okay? Because remember, that is the supply zone. That's where the sellers are. So we can retrace into that zone and then still sell back down. All right, so my first target is going to be 1545, which is that halfway point. We very well can come down there and then retrace up. Then the second target is 1488 with the max target of 1443. Right now, mind you, we're in a really weird situation with SoFi, and I think it's going to be a little choppy because of earnings is coming up. Now, right now, I see us in a head and shoulders pattern, okay, which I've went over in the previous video. So we very well could fall well below 1443, but we'll see. At that, essentially what that means at that target, that's not a hard target, right? If you see strength going through that target of selling pressure, then you ride the wave down. You guys have the levels underneath there too in previous videos. I'm not going to cover them here, but as of right now, that's what we're looking at. Okay, now on the call side, that's the bar at the top, right? The numbers at the top. So if we fall down into the demand zone and we start to see strength, then I'm looking at 1488 for entry. Now, if we fall to 1488, right, and we start to see support there, that's what I mean. That would be my first entry. I would essentially be buying into demand at that point as well if I'm starting to see weakness, and with the potential turnaround and the bulls taking over. So that stop loss will be 1430, which is just below my demand zone. Okay, my take profit target is going to be 1545. And then that second take profit target is 1597 with a max take profit target of 1616. Now, of course, if you've been rocking with me, you already know that the max target is actually 1997 on the earnings side of things. That's what I'm expecting for us to hit if we have good earnings and we get all the data that we need. Okay, that's the 1488 is also where I'm looking to start my my earnings play position for dollar cost averaging. I might do it earlier and then like take my time and go into it, but once I get to that 1488, I'm likely to go a little heavier in that play, and we're going to get into the contracts right now. Okay, the contracts that we have right now, I have the call option of January 17, 2025. Again, this is short-term stuff before the earnings actually happen because I'm expecting some volatility. Okay, so calls, if we were to fall to demand, is that contract right there. Now, understand, right now the contract shows is $1.25. However, if we fall to 1488 or 1445, then of course that contract is not going to be worth $125. It's likely going to be worth maybe $60. I don't know, but that's the contract I'm looking at on the short term. I chose that contract because I assume that if it works out, then we will be in intrinsic value, and that would be about 100% run up for us before earnings. Okay, moving on to the next one. This contract, the $20 call contract, is the earnings play DCA contract that I'm looking to put $1,000 into from now until earnings time. Okay, so right now it's currently $76. This is the SoFi $20 call with February 21st, 2025 expiration. Has good Greeks and everything, so that is the plan right there. Now be warned, all right, it's $20. It's very far out of the money if we were to fall, so there's a good chance that you don't make your money back. So we got to be careful and make sure we don't go all in at once. All right, again, the best contract for SoFi is the one that's going to be $1 to $3 outside of the money, okay, on the shortest time frame. Now, I am reluctant to get in because we don't know the exact earnings date, okay? I've heard 3 different earnings date right now, but nothing's concrete. So essentially, once I find that out is when I'm going to decide to go heavy or not, or upgrade or update my stance on the contract that I'm looking at. Okay, moving on for puts this week. Okay, we're looking at the SoFi $15 put. It's just expiration of January 17, and right now it's $53. Okay, this is a solid contract. You got 30,000 in open interest. And right now SoFi is looking weak, as I said, head and shoulders. And if we're below that level, right, of 1597, then likely we're headed down, and we can make some money on the way down. That money we could use to DCA into our SoFi long position, you know, our earnings position. So that's the plan for now, y'all. This is Stocks for Real. Please make sure you become a member, like, subscribe, all the good things. If you want more detailed analysis, and some more of the breakdowns of before and after the plays that I run, then you want to be an angler. If you want just early drops on options trade plays, then you just want to be a minnow. But there's something there for everybody. Hopefully you see the value, and hopefully we can keep rocking it the way we are. Appreciate the love and support. Take care.